All right, so another week, another all-time high. The markets, as far as the S&P goes, hit an all-time high on Wednesday. That was after the rate announcement. We hit about, I think, 54.44, I believe, on the S&P was the high on Wednesday, and we closed in the 54.30s on Friday. So literally within 0.1% of the all-time high. So again, another weekly high, intra-week all-time high as well. Same goes for the NASDAQ. The NASDAQ, I believe, peaked on Thursday, not Wednesday. And again, it's 7,000 and something, I believe. So again, new all-time highs in both of the major indexes. And I think that we are getting closer and closer to the point to where I wouldn't go as far yet, but if we can make it to the fall, I would say for sure the end of the year, well, not for sure, but overwhelmingly likely, if we can make it to the end of the year without seeing anything major break, it's looking like we're going to get a soft landing. Now again, I would say it's probably 60-40, 65-35, roughly where we're at right now, but as every day goes by, that number is going to go up. And I mean, if we make it to the fall, I'd say it's probably 80-20. If we make it to the end of the year, it's probably like 90-10, 95-5. And that's going to be very interesting to see. And not to mention, too, you still have like an NVIDIA hit a new all-time high. You look at basically every one of these major of the Mag 7, they're all-time high or very close to it. I believe Amazon is the only, well, I guess Tesla, but that's... Honestly, I don't consider Tesla to be one of those. I mean, even though they're technically in there, I think that it's noticeably weaker than all of those other stocks, right? Personally, that's the one that, all other things being equal, that's the one that I would least want to own. But again, that's just my personal opinion. But again, NVIDIA keeps grinding higher. And I mean, the market as a whole keeps grinding higher. And in the short term, I don't see what is going to cause a major correction. We're going to see a pullback in the summer or in the fall. It's just overwhelmingly likely. The question is it 4 or 5%? Is it 8%, 10%, 15, 20? Like, I don't think we're going to see 15 or 20. That seems unlikely at this point, but something could break. And I mean, if something happened, this is the thing that you hear a lot of people talk about. A lot of people, there's going to be another housing crash, or there's going to be a tech bubble or something like that. But what people don't seem to realize is that when you go back and look at history, the next crash almost every single time has almost nothing to do with any of the previous crashes, especially the recent ones. Right? I mean, look at what happened in 2020. Did anyone expect that? Look at what happened in 2008. I mean, the odd person expected that, but the majority of people, even the majority of the people in the industry, didn't expect it. The tech bubble, right? The list goes on and on. And I mean, people compare a lot of these things to the tech bubble, but a lot of those stocks weren't even making money. I mean, NVIDIA is clearly overvalued, but it's growing insanely quickly, and it is making money. So comparing it to the tech bubble, I think is not fair. And number two, the whole, there's going to be a housing crash. Well, I mean, you look at, I believe the number is like 40 or 50% of people own their houses outright. If that's the case, it's going to be pretty hard for things to get bad enough to where there's a crash when that many people don't even have a mortgage. And not to mention, too, there's a ton of people that will not move and aren't even looking to move because rates are at 7% and they got a 3% mortgage. So I think that a housing crash is also unlikely. If something happens, it's going to be something that's unexpected. And because of that, because it's almost certainly going to be something that is unexpected, it does not make sense, in my opinion, to try to time the market. Because a lot of people like to do that. Now again, that doesn't mean you're being stupid. I personally would be more conservative where we're at right now. I think that's a fair strategy. But getting out of stocks and into bonds or whatever and trying to time the market, in my opinion, the data is overwhelmingly likely that's never a good plan. My plan is I think you should be a little bit more weighted towards bonds or cash, whatever, however you want to put it. And when you see the pullbacks, you buy. And there are certain positions that personally I would always be adding to. It's just a matter of how fast am I adding to it? Am I adding to it at a snail's pace or fairly quickly? And those are the indices. Personally, I would want indexes to be like 10 or 20% of my stock allocation, and depending on where the market's at. Right now it's going to be lower because the market as a whole is overvalued, and that's just how that goes. So when we look at the rate decision from Joseph Wang, so again, this is one of the meetings where they release the dot plots, which are fairly informative as to where they project things to be. So only one cut is projected by the end of the year, and revising up the neutral rate, right? Meaning that's where they project unemployment. So again, that is, I mean, Joseph Wang said, like, this is, if anything, this is actually slightly hawkish. But when inflation was again, it's only 0.1 less than expected, but it is less than expected, and they are still projected to have a cut. And personally, there's a lot of people talking about, oh, they're not going to raise, or they're not going to lower rates, or there might even be a hike. I don't see that. Number one, because when you look at history, the overwhelming majority of time, when you get a hiking cycle and they stop, the overwhelming majority of time, the next move is a cut. Now, usually that's because something broke, which hasn't happened yet. So that's the big concern there. But if I'm being honest, if something breaks, that just provides a good buying opportunity. So I'm not, unless it's something that is like Great Depression levels of breaking, I'm not overly concerned personally. The thing about this is they also have to keep in mind is the market is still betting that there's going to be, I think, 2 to 3 cuts, but the Fed is only projecting 1. So the market is to some degree calling their bluff. Who do I believe? Honestly, normally I would say the market, but in this case I believe the Fed, because I'm still in the higher for longer camp, because it makes no sense to cut, especially when, relatively speaking, historically speaking, rates are not that high. I mean, they're high for the last 20 years or 10 years for sure, but historically speaking, going back 50, 100 years, they're not that high. So, and cutting, in a lot of ways, it makes things worse. I mean, cutting helps it helps real estate, and, if you want to start a business, or if you're going to borrow money, but it also hurts in that it's going to weaken your dollar a little bit. And thus it's going to cost more to import goods, which again in the West is something that we like to do. Sometimes doesn't really make sense, but hey, that's just the way things are. And on top of that, you get less foreign investment. So from a big picture, it does not make sense to cut rates unless you have to. Maybe a tiny bit, but I wouldn't say that it makes sense to cut rates, at least where they're at right now. Again, if it was me running things, I would want inflation to be 0, but again, that's just me. And again, another very important investing principle that is a little bit off topic is that you should be investing based on how things actually are and how other people, like the vast majority of people, are going to play things, as opposed to how you want things to be or how you think things should be. Too many people make that mistake, and they say, oh, well, if I was running things, I'd have rates at 10%, and if rates are at 10%, then the stock market wouldn't do very good, and therefore I'm not going to invest in stocks. Like, again, that's just an example, but that's not how it's going to be. That's not going to happen. That's extremely, extremely unlikely. But then there's other people that's like, oh, if I was in charge, I'd have rates at 0 all the time, and we'd be giving out endless free money and this and that. Okay, well, that's great and all. That would be good in some ways, but again, you'd also have 10% inflation. So there certainly needs to be a balance. Again, in a perfect world, the market would determine these things, and we wouldn't need central planners. But that's a different story altogether. So going forward, the Fed is actually speaking slightly on the hawkish end here, which is surprising because the market interpreted it as dovish. So what do I think is going on here is I think to some degree one of the things that the Fed likes to do is that when something is inevitable, like inevitably the overwhelming chance is the next move is going to be a cut. And up until that day, they're going to be talking hawkish. At least they're going to be leaning hawkish, because even if everybody knows they're going to cut, they don't want people to get too far ahead of themselves, because that could bring about inflation again. So anyway, that is that. As far as Bitcoin goes, again, Bitcoin is down. I think it's down around 66,000 US roughly, which again, they're down quite a bit on the week. What's going on with Bitcoin? Honestly, I don't know. If I was guessing, though, I think that this is just the big players, and more not necessarily the whales, but the institutional guys keeping the price down so they can continue to accumulate more. In my opinion, that's what's going on. Because if you look at the whales are overwhelmingly buying. If you look, when you look at this post from Bitcoin Magazine here, the amount of entities with over 1,000 Bitcoin is almost at a new all-time high. I mean, based on this, it looks like it is at a new all-time high, and if it is, it happened within the last few months or so by the looks of things. So the people that own the most Bitcoin are overwhelmingly either holding or buying. And what does that mean? Well, if those people are holding and buying, well, why would you not be holding and buying? It makes no sense. So I think that the selling is simply the traders are artificially keeping the price depressed. Now again, am I saying that there's some big massive conspiracy? No, I don't think that's the case. But over a short period of time, absolutely that could be the case. Over a long period of time, no. Obviously, there would need to be something else going on if this happens for a long period of time. But again, like I mentioned last week, Bitcoin is still up like 150% over the last year. I think that over the next few months, 3-4 months, we're going to see a run-up. It might not be significant. It could be 100%. Nobody knows. But we're going to see a nice run-up. That is, in my opinion... Again, my opinion, I think that's inevitable. And I think that some situations like this are just the calm before the storm. And I mean, what happens? Inevitably, we're going to get like I said, we're going to get a cut. When the Fed cuts, that's going to be bullish. So I think that the data overwhelmingly points towards one conclusion, I think. Another important thing here, MicroStrategy is going to raise more money to buy more Bitcoin. Again, like I said, the whales are overwhelmingly buying. The trend is quite clear here. So, and again, this is the way that you should be thinking about this stuff. Again, in my opinion here, the price should be irrelevant to you, right? I mean, when you're buying a stock, you shouldn't need to know the price when it comes to whether or not you should buy, especially over the last month or 2 or 6 or year. Like, frankly, you really shouldn't have to know the price. When you look at Bitcoin, if you go back a year, everything that has happened, that is like, realistically, I don't think that there could be anything happen. I mean, aside from like the U.S. government declaring it legal tender or something like that, like almost nothing could happen that would be less bullish. I mean, you have ETFs. I mean, the States, Canada has already had them. Virtually every major country has had them or going to be getting them. You have the whales overwhelmingly accumulating. You have several other companies that have added it to their balance sheet. Like, the list goes on and on and on. And not to mention, too, you have Trump, who's the front runner to win the presidency, who's talking very highly of it. And I mean, frankly, I think that as time goes on, given what we've seen, with quote unquote crypto, if they're approving Ethereum ETFs, and there's rumors of XRP and Solana ones as well, if they're doing that, the chances of Bitcoin getting regulated is extremely low, because they're giving the shitcoins ETFs. Why would regulation of Bitcoin be a thing if they're going to give the shitcoins ETFs? So I think we're still bullish. So anyway, that's basically what I wanted to get across there. So anyway, that was the video for this week. If you like it, please like, comment, subscribe, and stay tuned for more.